This is the Construction Europe podcast with the editor, Sandy Guthrie, and deputy editor, Helen Wright. This podcast is produced by KHL Group, first for global construction information. Go to www.khl.com for more details. This is the Construction Europe podcast for March 2014. In the news this month.
Corruption estimated to cost 120 billion euros a year.
Russian construction output fell in 2013.
EIB supports Finnish infrastructure upgrades.
Architects survey reveals mixed fortunes in Europe.
Industry supports flood-hit UK.
And also in the UK, new work is rising.
Corruption is estimated to cost the EU economy 120 billion euros a year, and that's just less than its annual budget, according to the European Commission. The Commission's first EU anti-corruption report, which is a survey of corruption in all 28 European member states, highlighted the urban development and construction sectors as being vulnerable to corruption. At European level, the report said that more than 4 out of 10 companies considered corruption to be a problem in business, and this is true for patronage and nepotism too. When asked specifically whether corruption was a problem for their business, 50% of the construction sector and 33% of the telecoms IT companies felt it was a problem to a serious extent. The smaller the company, the more often corruption and nepotism appeared as an obstacle when doing business, and that's according to this report. It also found that corruption was most likely to be considered an issue by companies in the Czech Republic, 71% of respondents, Portugal, 68%, and Greece and Slovakia, both 66%. The document, which the Commission said it would publish every 2 years, also pointed to new EU-wide public procurement directives as one potential way to tackle Europe's apparent corruption challenge. The new public procurement package is expected to be adopted in early 2014. However, FIEC, and that's the European Construction Industry Federation, has already labelled this new directive as a missed opportunity.
Construction output in Russia fell by 1.5% year-on-year in real terms in 2013, according to data provided by the State Statistics Service, Rosstat. Examining the figures, research company PMR said that in value terms, however, construction output had been worth 124.6 billion euros in 2013, against 109.1 billion a year earlier. It said this translated into 3.6% year-on-year growth, while in 2012 it had been 11.1%. PMR added that in December 2013 alone, Russia's construction output had fallen by 3% year-on-year in real terms, against December 2012, where there had been a 1.6% increase. At the same time, though, output within the sector was valued at 16.9 billion euros as compared to 16.7 billion euros in December 2012. PMR said this meant a modest 1.1% year-on-year growth compared to December 2012, when it had been 9.9%. Overall, December 2013 was the 5th consecutive month when construction output was reported to have fallen in yearly terms. In fact, PMR said that with the exception of May, when it grew by 1.6%, and July at 6.1% growth, the indicator had been decreasing since April 2013.
The European Investment Bank has approved a €150 million loan to support infrastructure upgrades in Lahti, which is a city to the north of Helsinki in Finland. It said the funds would finance small to medium-sized municipal infrastructure upgrade projects to cater for the growing population, as well as to promote future economic development. Transport schemes are planned to receive funds as part of this package, mainly the renovation of streets and the modernisation of infrastructure, with a view to reducing journey times in the region, as well as vehicle operating costs.
Italy, France, Spain and Poland are predicted to continue to see declining building volumes in the latest survey of architects. Building volumes will be lower in the Netherlands this year despite recent rises. However, The UK, Germany and Belgium are expected to see a small amount of growth, or at least similar figures to 2013. Now, these figures are from the European Architectural Barometer. This data is compiled from market research conducted quarterly among 1,600 architects in these 8 countries by ArcVision. For Italy, France, Spain and Poland, in combination with a negative development of building permits in 2013, construction in these countries is expected to decline in 2014. For Dutch architects, 2014 will bring lower building volumes than 2013, the survey found, despite the fact that the country's fourth quarter of 2013 was the best since the second quarter of 2011. Meanwhile, from the third quarter of 2010 onwards, there had been a steady positive development among German architects, said ArcVision. In the fourth quarter of 2013, both German sentiment on the order book and turnover development were positive again, but with small changes compared to results from the previous quarter. However, the few signs of improvement noticed among the French architects in the third quarter of 2013 were unstable and only temporary compared to the previous quarter, the survey revealed. Spanish architects reported more or less the same state of their order books as 3 months ago. 1 out of 5 firms reported an increase in their order book, while the ones who saw their order book decline almost doubled to 37%. However, ArcVision felt that with every quarter of 2013, Spanish architects were becoming more positive, feeling the bottom had been reached and improvement should follow. And after a very bad second and third quarter of 2013, the majority of Italian architects reported that they had again experienced a drop in order book and turnover for the final quarter. In contrast, it said the UK had experienced the highest number of architects ever who saw their order books growing. But despite the very positive signals coming from British architects responding to the survey, ArcVision pointed out that building permits for non-residential construction projects had in fact decreased significantly in 2013 over 2012. ArcVision therefore predicted a stabilisation of the market in the UK for 2014, and in fact a small increase of 1% in 2015.
In the UK, the damage caused by widespread flooding that hit the country this winter could cost its economy up to £630 million. That's €768 million, and that's according to accountant PricewaterhouseCoopers. Meanwhile, manufacturer JCB has employed a £750,000 or €913,132 fleet of machines, and that also includes operators, and it's deployed them to help support flood relief efforts throughout the country.
New construction work in the UK is rising according to official figures, but repair and maintenance is not doing as well. The ONS, the Office for National Statistics, it's found that a comparison of 2013 annual data with the previous year showed that UK construction industry output was estimated to have risen by 1.3%. £1.49 billion or €1.82 billion. However, while new work increased during these 12 months by 2.4%, £1.62 billion or €1.98 billion, there was a slight decrease in repair and maintenance of 0.3%, £140 million, €171 million. The seasonally adjusted estimate of construction output in the fourth quarter of 2013 rose by 0.2% when compared with the previous quarter. During this period, there was an increase in the volume of construction new work of 0.7%, but a decrease in the output of repair and maintenance of 0.5%. The monthly output of construction in December 2013 was estimated to be 2% higher than November 2013. The pattern seen in the quarterly data is repeated in the monthly data, with new work showing growth, 3.4%, alongside a slight fall in the output of repair and maintenance, 0.2%. The ONS said that estimated annual volume of construction output in 2013 of £112.6 billion, €137.6 billion, was 3.9% greater than the level recorded during the economic downturn in 2009. However, construction output remains 12.2% below its peak of £128.2 billion, €156 billion, and that was recorded in 2007.
In business news, manufacturer Volvo Construction Equipment reported revenues of 53.4 billion Swedish krona, that's 6 billion euros, for 2013, and that result was down 16% compared to 2012. Operating income also took a hit, and the manufacturer said general weak market conditions had taken their toll on the results. Meanwhile, contractor Vinci reported an increase in revenues and net income for last year, despite difficult market conditions in Europe, as well as bad weather in the first half. It reported a 4.4% year-on-year increase in revenues to 40.3 billion euros and a 2.3% rise in net income to 2 billion euros. And recovering economies around the world fueled a positive 2013 for cement producer Heidelberg Cement, which is cautiously confident of further growth this year. Preliminary figures for 2013 showed that revenues were stable year-on-year at 14 billion euros, while operating income was slightly above the previous year at 1.61 billion euros. Now, away from results season, online used equipment auction company Iron Planet announced a strategic alliance with Mascus, which is a web-based marketplace for heavy equipment. This deal will see Iron Planet take a minority shareholding in Mascus for an undisclosed amount, while the two sites plan to integrate. This will allow sellers on the Mascus site to pass items on to Iron Planet for auction, while buyers on the Iron Planet site will have access to equipment on Mascus. Further merger and acquisition activity, and Foster Wheeler and Amec have signed a definitive takeover agreement following Amec's January 13th offer to acquire the company. We reported on this before. The cash and shares deal values Foster Wheeler at $3.3 billion, that's 2.4 billion euros. Finally, Amann Group has agreed to acquire concrete mixing plant manufacturer Elba Werk. Amann said the addition of Elba was an ideal complement to its existing asphalt mixing plant and road building machine divisions.
After a remarkable rally in 2013, it was expected that share prices could lose ground in the early part of 2014. On our finance pages this month, Chris Slight pointed out that there was a seasonal tendency for the markets to get overbought in the run-up to the Christmas and New Year period, and then to fall back in January and February. He said that although this often seemed to be the timing, one of the well-worn cliches is that bulls don't die of old age. That's to say, a bull market with rising share prices needs some bad news to trigger a fall in share prices. Certainly, share prices have fallen in the early part of the year. Most striking has been the Nikkei's 9.35% loss between weeks 1 and 7, but the Dow was also down 1.92%, and the FTSE 100 lost a more marginal 0.44%. More encouraging have been the 2% or so gains for the CAC 40 and the DAX. He said that the losses in the US, UK and Japan are linked to the US Federal Reserve's decision to phase out its quantitative easing QE program. Although the impact has been by a roundabout route, the so-called tapering announced just before Christmas will see the amount of money the central bank creates to buy up assets like government bonds fall from the previous level of $85 billion, 63 billion euros a month to zero, probably by the end of this year. Although it's an American policy by the United States Federal Reserve, the impact of tapering is largely being felt outside the country. The winding down of QE means demand is falling, so yields are rising for the type of securities the Fed was previously spending money on. There's more in the March issue of Construction Europe about all this.
With final details of renovation loans about to be made public, FIEC considered how this facility might help with the saving of energy. In its regular column, it highlighted the fact that the European Commission stopped short of mandatory targets for energy efficiency. Perhaps this is a missed opportunity, FIEC suggested. In Brussels, it has been involved in discussions with Directorate General Enterprise as part of the Commission's Construction 2020 initiative. It said the same mantra has been heard many times. Renovating the EU's building stock will significantly reduce energy consumption in Europe.
CC is linked with a limited number of international exhibitions, most of them being held in Europe, and with SMOPIC, Samoter, CTT and Bauma China all taking place in 2014, it's going to be a busy year for CC, its associated members and associations. For decades, CC has had a close partnership with some of the leading trade show organisers. In its regular column in Construction Europe, it said this was for the good of companies and industry alike. The cooperation helps to create a good environment for companies to display construction equipment in markets that are important to the industry or that have some growth potential. The goal is to support exhibition events to be increasingly responsive to the needs of the sector. Associations are usually involved to define appropriate marketing strategies for each market segment on display. So the first European exhibitions to come this year are being held in Spain and in Italy. CC said the economic situation of the construction sector in southern Europe remained fragile. The positive news for the Spanish market is that the equipment industry has finally bottomed out after 6 consecutive years of decline, and 2014 should see considerable growth, yet still on a very low absolute level. It's against this very cautiously optimistic backdrop that SMOPIC, the trade show for public works, construction equipment and mining machinery, will take place from the 1st to the 5th of April in Zaragoza, Spain. Samoter, the 29th International Triennial Earth-Moving and Building Machinery Exhibition, is scheduled for the 8th to the 11th of May in Verona, Italy, although after we went to press we have heard some rumours that it might not in fact take place. We're still waiting to hear. This year marks the 50th anniversary of that trade show, though, and sees the debut of Asphaltica, a new technology exhibition for road paving, safety and infrastructures organised in cooperation with the Italian Asphalt Association SITEB. Trade delegations are expected from more than 40 countries, with a focus on Eastern Europe, the Mediterranean area and the Gulf. During the show, Samoter, supported by CC, will hold a construction equipment day featuring issues connected to Europe as a production site for construction equipment. And as I said, keep an eye on the website for news of Samoter. From the 3rd to the 7th of June, CTT is being held at the International Exhibition Centre Crocus City in Moscow, Russia. CTT has rapidly developed into the most important trade fair for construction machinery, construction equipment and technology in Russia and the CIS, and that's something I noticed when I visited the show 2 years ago. CC pointed out that, albeit with slight sales declines of 6% in 2013, Russia remained the second largest construction equipment market in Europe, and they said the prospects remain positive. The need for infrastructure investments in Russia is huge. Towards the end of the year, between the 25th and 28th of November, in Shanghai, will be Bauma China, the international trade fair for construction machinery, building material machines, construction vehicles and equipment.
The magazine also included features on engines, road building and crushing and screening, as well as a preview of the upcoming SMOPIC show in Zaragoza in Spain, which, as Sandy said, runs from the 1st to the 5th of April. This preview highlighted the international trade missions that the organisers of the show are planning to take place during the event itself and their potential for boosting export trade. For the road building feature, Sandy looked at some of the latest products and projects taking place around Europe and what these mean for market sentiment. In Crushing and Screening, we previewed some of the many developments that were to be showcased at the ConExpo show in Las Vegas, which took place last week. Meanwhile, the engines feature concentrated on the challenges faced by manufacturers in meeting the strict off-highway diesel exhaust emissions laws that started coming into force in Europe at the start of this year. As well as that, I looked at the many de-tiering strategies that manufacturers are developing in order to help their customers maintain the residual value of their machines.
Talking of engines, on the tablet version of the March issue of CE, there's a bit of a bonus. There's a video interview with Martin Parker from Caterpillar. I met up with him in Malaga, Spain, and I asked him about the company's Tier 4 strategy. On the equipment pages, there's a short video interview with Eric Harden, also from Caterpillar, about CAT's new articulated trucks. These videos can be found on the Video Zone at www.khl.com. We're both just back from ConExpo in Las Vegas, and it was great. We hope you saw and enjoyed our daily newsletters that we produce to keep everyone up to date with the latest news from the show. We took some videos as well. They're now all on www.khl.com. That's it for this month. Until next month, goodbye.
Goodbye.
This podcast was produced by Construction Europe magazine and is copyright KHL Group. Construction Europe is part of the KHL Group, which also produces Access International, American Cranes and Transport, Access Lift and Handlers, Construction Latin America in both Spanish and Portuguese, Demolition and Recycling International, International Construction, World Construction China, International Construction Turkey, International Cranes and Specialized Transport, and International Rental News. Details of these magazines and the sector-specific weekly e-newsletters are at www.khl.com, where other podcasts and videos are also available.